Hello everyone. How are you doing today? Time for another backtesting and chill. Amazing. Everybody's feeling great. Amazing. Love it. Just waiting for Mage to join me. Mage, are you
Hello.
here? Hello.
I was here.
You were here. So I'm sorry, guys. Actually, it's Mege, but I call him Mage because, like, there was a time where I liked World of Warcraft. So whenever I see his name, he's just my mage. He's a magician making DR lands, so Mage is much better than Mege. Just to let you
It's
know.
it's my new skin now, so I'm fine.
Yes, that's cool. That's cool. Um, Okay, guys, so today we're gonna do something crazy, and I'm gonna showcase to everyone before we start with the normal backtesting. I'm gonna show what was possible today using DR Lens and Drive. I'm gonna show you how unbelievable it is, and I'm gonna show you why everyone in the academy today was literally jaw dropping. And when I mean jaw dropping, then it is really jaw dropping. And I can't wait for you guys to see that. And this potential is just so huge with DR in total, but using DR Lens and using the script is just from another world. And of course, a little bit my teachings too. But at the end of the day, everybody who puts enough time into studying DR and all of this stuff is gonna be successful too. So let's get started. And we're gonna start today and we're looking at the ADR session. So are you ready, Mage?
Master, one thing before we do that. A lot
Yes.
of people are asking if you can mute your Discord because they can hear
I,
all the.
I the problem is I already enabled streamer mode and it's showing me I don't have notifications, but they were still coming in. So I'm sorry, guys. That's you have to deal with this. And it's not me. You see, it's not me using everyone. So that's my daily Discord sound. Click, 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 click. It's almost like EDM. It's like it's going with the beat of the music. So I'll fix that till next stream. But for now, I turned on streamer mode and I checked notifications. Should not make a sound. It's still making a sound. I have no clue why. So I'm sorry for the disturbance. Next time I'm gonna fix it. Except you want me to go offline because I have Mage on the Discord. So if I want to do change anything, I have to throw him out, get him back in, and all of this stuff. So I think we deal today with my like. Imagine it just 2 hours in the life of the master and his Discord notifications.
They're
Okay.
saying join D&D, but we'll figure out next time, guys. It's
We'll,
okay.
we'll figure out. I will figure it out. I tried today enable streamer mode because I saw that we had it last time, but it's still binging. So I'm not even hearing it anymore. So bear with me, guys. Next time we're gonna do it, and you're gonna not hear it anymore. So yeah, mate. Let's get started. So my question today: have you seen what I was telling the people in the SMP chat today? In my SMP chat.
Yeah, I kind of saw it. I didn't realize what kind of a beast we released to the people.
Definitely.
It's amazing.
But like let's be honest, would you have expected to be used like that?
I to be honest, I didn't even realize how much you can do with the data we collected. And there's so much more data that is locked into the data set that is just not displayed at the moment. So I'm super thrilled of the possibilities in the skilled hands. You know, it's it's not for everybody. You need to understand what you're doing with it, with the data, and I think this is the purpose of the meeting today. You're going to show the capabilities, what to look for, the relationship between the numbers you see, and how you can connect those numbers to the charts. And maybe at the end of the session we can also go through some of the definitions, because I saw some confusions about retracement, where they are calculated from, what is retracement after the 0.5, and what is a negative retracement. So maybe we can clarify those things as well.
Do the people see my screen? Do you see? Yeah, they should see it, because like in my YouTube it looks like it's still the starting screen there, but I think that's a bug.
No, they can see your screen.
Okay, so let's get started. So you see today we're gonna start in the ADR session, and we're just gonna skip a little bit forward. So now ADR session is forming. You see the nice rejection from the 0.5 standard deviation down here, and we skip ahead. Another 4 candles. So now ADR is ready, right? So we're looking at it, and I don't see anything interesting over here. Literally the only thing I see is the nice rejection from the 0.5 standard deviation level. So I would be generally seeing it a little bit more long favored, but I would wait. So the next candle is coming. We are not confirming in any direction yet. So here we have now the confirmation coming in. So that means ADR long confirmed. And what we can do now is, we know we want to look for a long trade, but now we're using DR lens, and I'm switching over for a second to the DR lens screen. So I hope everybody sees it. So now we can check our scenario for today. So we have Monday by day, Monday, correct. So we don't know yet if the DR rule is true or false, so we leave it on all. And now we're gonna have a confirmation to the long side, and we know the time of the confirmation. So let's check the chart again. So time of the confirmation was 8:45 p.m. New York Standard Time. And we have 1 wick already happening directly at 8:30, which is going above the DR. So that will be later interesting. But just keep in mind we have a wick at 8:30 and we have a confirmation at 8:45. So now we can take the DR lens and we can click all of that away, because the wick and the confirmation was at 8:30, or between 8:30 and 9 o'clock, right?
Mm-hmm.
So now we are looking for a long entry. So we know, based on the data we are getting now, we know if the average, we don't know yet true or false, but we know already we are expecting a 1.3 median SD extension. And median is something different to mean, but we will explain that later. We will see maybe a median max retracement of 0.4. And before the high of the day, it's telling us we will have no retracement at all. And the retracement also after 0.5 will be an average. The median is also 0. So in both of these cases, we are not expecting any retracement. And that's telling us that retracement during the ADR session on Mondays with a long confirmation are very unlikely to happen. So even right now, I can say most likely we see a 0.4 retracement for the long trade, or we see 0 retracement at all. So now what we are doing, we are taking a Fibonacci and we just see where are our standard deviations based on the IDR from the ADR. So now we see we have our confirmation, and this is 0.5 standard deviation, 1 standard deviation, 1.5 standard deviation. Look what we have here. Sorry, I need to switch my screen. Mate, you tell me, please. So what I just did, I do it again because I had the wrong screen. So I'll take now, after I know the data, I'll take the standard deviations for the ADR session. So 0.5, 1, 1.5. So here, no entry for us, and we go up to 1.5. So now we switch back to our DR lens, and what do we see? Mage?
I cannot see the airlines at the moment.
You don't see the screen. Okay, so I have to do this by myself. So we see that we have expected 1.3 standard deviation to the top. That's the average, the median standard deviation extension for a Monday ADR session. So we already reached 1.5. So now I ask you, would you look for another trade now? So you know you have your data, and you know we already reached the standard deviation median, which literally gives you already the information that, oh, okay, I literally don't want to look for a trade anymore in this session because all the targets are already hit.
Mm-hmm.
So now what we can do, even go further, and we say, okay, now I want to know how a true day looks like. So what is, if the DR rule is true on this day, how are my numbers looking like? So I take true and I see the changing. So now we have, if it's a true day, 1.5 is the maximum, the median standard deviation extension. And that's here. So already at not even half an hour into the ADR session, I know that all possible targets with high probability are already taken out. So if I trade this, I am not going to look for another long trade now. Does that make sense? I don't see the chat, so give it a little bit time.
Yeah, this is a really advanced use of the data. Like, I personally didn't think about this before. I thought, you have the confirmation long, so initially the strategy and the rule that you always told people is you have a confirmation long, you look for a trade in the same direction. But now you're saying you have a confirmation long, but you know the target for the long side, the most likely target has been already reached. So maybe you can switch your bias.
Exactly. So it's not only reaching a target, it's knowing where your probabilities are. And yes, I never talked about this because simply I have my own database, you were working on your database, and it's just something I couldn't show the people because they would not believe me. It's what I talked about yesterday. It's about using statistical data to make the best possible trading decisions, backed up with a clear concept behind. So looking at this now, we know that. So now the question is, what we know already, the true day should look like that. We know on the true day, we have 1.5 standard deviation, so we reached it. So now the next thing I would do if I trade this session, I would look for how does a wrong or like a false day look like. So I want to see both data. I want to see how a true day looks like, and I want to see how a false days look like.
I think you need the chart.
No, I'm on the DR lens now.
Oh, okay, sorry.
Yeah.
Yeah.
So a false day reaches in average 0.5 standard deviation, and we are retracing after 0.5. So after this level on a false day is reached, we are reaching 2.2 retracement. And in total, the max retracement is an average 2.5 standard deviations, which would be 0.5, 1, 1.5, 2, 2.5. So somewhere between here and there. Are you still there, Mage?
Yeah.
Okay.
Yeah.
So let's look at the chart now. So what do we know? A false day. So if the rule should break to the downside, we are expecting a retracement to the 2.5 to the 2 standard deviation. So that would be 1, a 0.5, 1, 1.5, 2, 2.5. So let's mark this out because I don't like to have so much standard deviations here. 1, 2, 3, 4. That's 2 and that's 2.5. So that's the retracement we get from our data from DR lens. So not only we understand now for a true day, we most likely have seen with a very high probability already the max extension. So we know we don't want to look for a trade on the long side now. Now we are looking what the market is doing, what price is telling us. Because like if there should be a false day, we know if it's a false day, market will go to at least 2.2 to 2.5 standard deviation to the downside. And I hope what I want to tell you with that. So let's check. So as you can see, we are coming back, And a lot of people now, without the data, would think about taking a long here. Yes?
Yeah.
Which wouldn't be wrong, but like when you have the data, you're just not looking for a long right now. So price goes up, we have a lot of volume imbalances here. So here we have a nice rejection from the top. Another nice rejection. So that could induce people to go long here. But like time-wise, here it's not a lot of time left for the session. So, but now we are coming back. And now, where's my confirmation? Here. So with this candle, I get a confirmation that we have a false days. And so far, when we talked about DR, it was only about one side confirmation. But like now that we are into the academy, we now see the power of the whole thing. Because a lot of people were asking me all the time about how to trade a day with a false confirmation. And I never answered that because I said, please study DR first, because to really trade to the maximum with DR, you need to have the data, because the data give you everything what you need to understand. And of course, now it's a different story. So now I can show you how to handle a day where the confirmation is to both sides. So we are getting a confirmation here, and based on our data, I'll show them again. We now know that this is a false day, so false. So what are we expecting? We are expecting either a retracement to 2.5 or 2.2. So what you could do with the confirmation candle, you could directly place a short after the confirmation with the stop above the DR and the IDR levels, and your target could be either the 2.2 or let's say the 2 standard deviation in this case. Or if you want to light longer, you could take it here. Yeah? Because why you can do this trade? Because very simple, because you have the data backup. You know, based on 20 years of data, that's the most likely scenario to be happening. So you are getting not only the information about not taking a long trade, you also get the information about, hey, if there should be a confirmation to the downside, that will present me another trade opportunity, which I can use to make profit.
Mm-hmm.
So,
and please show the screen now on the chart.
Okay, you have to tell me that.
Yeah, sorry, I see 20 seconds delay on
Yes.
the YouTube.
So I'm coming back here, I'm showing the people again. So after you get the confirmation to the downside, you can enter a trade with the next candle. You can use it as a breakthrough with the confirmation. You put your stop 2 ticks below and you're either targeting a new low, for example, that would be one target for the low-hanging fruit, or you go for the 2 standard deviation to the downside, or you're a big baller and you say, okay, I wait for the median max retracement, which would be in this case 2.5. So the data not only tell you, hey, I shouldn't take a long trade because my maximum target is already reached with this candle. It's also telling you, once you get a confirmation to the downside, this is your potential area where prices most likely go to. Does it make sense to you?
That's so powerful. But so just to make clear, you wouldn't switch bias until it's a false day, right? You wouldn't anticipate to take a short trade
No.
after.
Yes. Like, even though I know that for me, the target reach of the 1.5 standard deviation here just means, okay, I'm not interested in doing anything right now. So, and then I switch to my data and I know, okay, I put an alarm here and I tell myself, okay, I look if we get a short confirmation because the maximum retracement looks very nice. So I want to see if I take a trade there. But I'm not trading any short on the way down here. I need to wait for my confirmation because then I am confirmed that it's a false day and then I can trade for the retracement.
Amazing. It's even more liberating, right? Because you don't have low-hanging fruit in the upside, and you need to wait for a certain condition on the downside. So you just set a trigger, and then you can do whatever you need to do, and you don't need to be kind of churning and staying tired on the chart all day long to wait for something that may or may not happen, and even induce you to take the wrong trade because you're bored.
Yeah, it's not normally like if you start to implement all this stuff which I'm teaching, you should not even come to that point. So like when you see that, you're just like, okay, I wait, price comes down here, I maybe get another chance, else I wait. Or if there is like, it's very close to session end and you see some proper rejection there, then you look how it's going to be in the ODR session. But like you're getting such a confidence because it's not only you anymore, and that's the biggest point for you guys. It's not about like, till today or till yesterday or whenever you joined into the academy, I am pretty sure what I'm saying is true for 90% of the people who joined into the academy. It's before you were thinking, okay, I know something about trading, I learned that, I learned ICT, I learned whatever. So, and then based on the knowledge you gained and you learned, you looked at the price and you were like, okay, I'm taking a trade based on whatever I have in the back of my head, right? And now this is dramatically changing for you because from 0 to hero, you're not looking at price anymore and say, yeah, that's just what I'm guessing what it's going to happen. No, now you have a tool and we teach you something where you can say, my trading decision not to taking a long trade is based on 20 years of data. And if I take a short trade down there, it's also based on 20 years of data. And that makes you a completely new person when it comes to trading. Because all of a sudden, you're not hoping, you're not thinking about how should whatever price should do. You're not looking for like whatever, let's say, whatever people are using. I don't want to talk bad about any other concept, but you're not doing this anymore. You're not pretending that you are super smart and you know where the market is going, because at the end of the day, that's not professional. So you're basing from yesterday to tomorrow, you changed from a trader who is pretending to know whatever price will do next to a trader who is basing himself and his investment decisions based on hard data, on tangible data. These data and these levels, what we will see today, they can't be faked. It's just the reality, and we're gonna see how they work to the tick and how you can amazingly exploit what I'm teaching you. And yeah, so
Let's clarify something very quickly. There was a message in chat asking whether we should change confirmation direction to short. So I think this is a good opportunity to explain why that is not the case, right?
Sorry again, I didn't get it. What?
Someone asked why we're not changing the confirmation to the short side in the data.
Because it's not a short confirmation, it's a confirmation that you will look only for short trades. But it can happen when the range is good, and the more you learn now during your academy time, you will see that we're gonna take trades inside the range into the opposite direction, but also calculated and based on numbers. You will indeed, for a matter of fact, you're gonna see this in less than 10 minutes most likely.
Yeah.
So that's why, I mean, get away from all these retail dots. Get away from it. There is no, like, we are working price, time, price, and algorithmic theory. That's what we are doing here. And we are quantum warriors. And I like to just say quant warriors because we are trading with the algorithm. Mm-hmm. So the algorithm doesn't care about short or long. All he wants to do is to make as much profit as possible. The direction he is going doesn't matter to him. As economic data doesn't matter to him. These algos, they don't care about that. It's sad, but it's the reality.
Yeah. I think, let me just clarify the definition in DR lens. If it's a confirmation long in the database, that only relates to the first confirmation. So even if it's a false day and there is a short confirmation afterwards, it just means it's a short day. It doesn't mean you need to switch the direction to look at the data, because the first confirmation was on the long side. So that's all you care about. You only screen for the first confirmation. That is your initial direction. If it becomes a false day, you don't need to switch and say, oh, now I need to see the data for the short confirmation. No, because the data was confirmed on the long side when it initially broke.
Perfect. Okay, so let's see how this goes out. So as you can see, like whatever target you would have picked for this trade, so just going for a new low, we have 3.5 R. If you're going for the 2 standard deviation, 4.6. So even if you would go for the middle target, that would be already a good trade. And we reached what exactly the numbers were telling us. I mean, if you would look at your DR lens now and you check the data I showed you, you will see that we are exactly at the bucket where most of the retracement ends on a false day. So this is not something I have in my head and I tell you, wow, I'm such a good trader. No, I'm delivering you proof for everything what I'm teaching you. And that's a big difference. And like everybody can do it. If your mindset is right, everybody can replicate that. It's not only me. Everybody who's taking in the time, working together with me, is going to be able to do that. It's not that you have study 5 years charts and figure out if a fair value gap is working or not. That's not what we are doing here. So,
Can I clarify something which, just to make sure we are clear? I think the retracement is calculated by the high IDR though. So if we are saying 2 times retracement, I think the 2 times is calculated from the upper IDR.
Yeah, I know that, yes. I know that.
I don't remember the data that we show on the dashboard. Was it 2.5 times?
No, it's 2.5 times, yeah.
Yeah.
Yeah, so literally what we could do is simply 2.5 times would be the range of the DR, so that everybody understands. So the database is collecting, it's always thinking about the IDR range. That's first important to understand. So, and 2.5 standard deviation would be literally here, and another half standard deviation. So actually the 2.5 would be here.
Yes.
Yeah.
That's what. Yeah.
So that's what the database numbers are telling you. Exactly. So, okay, so now we have this topic. And now we are getting into the ODR. So, me personally, I didn't take this trade. It's just to show you how you can work with the numbers you're getting presented. And now we're gonna go in ODR. I was trading the ODR. People know from the chat in the academy also what I have done. So we are going into the ODR session, and you see we are reaching down to the other level. And now the ODR session is ready. So we are staying here. This is our first point where we already break through the DR. So if I use the database I'm using, the first thing I'm doing is the first point I'm taking for calculating my areas where I think price will be going is the first wick, and then whenever we would get a confirmation. So let's see how price is going. So now this is our confirmation candle. So now I can go into my DR lens. And now we have ODR session. My first wick would be at 405. So first I want to see how my data look like for the wick confirmation, if my data would look anything. Hello? Not again. I think again too much people in there.
Give it some time.
Okay, let's wait a second. Can you tell me a joke, Mage, while we are waiting?
I need to ask ChatGPT. Right.
Now the data. You're lucky you're out of it.
Good.
So now we have our, we are looking for data from the wick. So the wick was between 4 and 4:30. We have a confirmation most likely to the short side, or we have a confirmation to the short side. We don't know true or false, so we leave it like it is. So now we are looking for a short trade, right? That's our target, because we have confirmation to the downside. So that means we will be looking mainly for short direction. But as we have a nice range, it would be nice to know what is the retracement. So I'll show you on the chart again. So we have a big range on the DR, the ODR, which is like 416, so 16 points range. And it would be nice now to know where we should expect a retracement. And maybe if we are when we are very trained and skilled, we will see, or we will know that we could maybe take trades also into the direction of the retracement. So let's go back to the data and see what the system is telling us. So the system is telling us that on a Monday in the ODR session, with a short confirmation, our median standard extension would be 1.2. So target would be 1.2 standard deviations to the downside. It's also telling us the median, so the average retracement will be around 0.8. It's telling us the retracement before the high of the day or the low of the day would be 0.2. And the median retracement also after 0.5, so we're getting 2 times confirmation 0.8. And normally we would expect the maximum extension time would be 5:35. So let's put this in our chart. Let's give it to Drive. Hello Drive, how are you doing? So we have 80% retracement. So all what we have to do is 80% retracement of IDR, and Drive is doing everything for us. So maybe I should turn on that it's showing me too. Where is my line? Did I turn something off? Where is my line? It's here. We need confirmation first. So now we have the confirmation. So now I have 0.8. So that's the retracement which I expect from the confirmation of the wick between 4 and 4:30.
Screen.
Yes. So again, I'm sorry, not used to switch in between, but like the chart right now, you see the blue line, and the blue line is literally, I put everything in Drive. So I told Drive 80% retracement of the IDR, show me a line. In my case, that's the blue line up there. So we're gonna take a box now at the 80% retracement, and we do it over here. So now we switch back, and now we're collecting the data, and we make a line. We are collecting the data now for confirmation, which happened at 4:45. So now we're getting out the data. So, and now it's slightly, the median SD extension stays the same. And the max retracement is 0.6, and the median retracement after 0.5, it's the same. So also 0.6. So now we are feeding Drive again. And we are looking, where is the 60%? So again, I was too slow with the switching. So 60% now, and we have our blue line here. So now we can draw our box, and this box literally gives us a visual for all the levels and all the data we have in DR Lens, which are telling us this is the area where we expect price to go for a retracement based on the data DR Lens is giving us. And now we are adding time. So as we have seen, the maximum extension time, and that's a very important thing, maximum extension time is 5:45. So we're gonna take another box, 5:45, and from the other data set, it was 5:33. So I'm gonna show you also the 4 o'clock one. So as you can see, 5:35 to 5:45, so 10 minutes difference. So when we take our chart and we are marking a box at 5:35 to 5:45. So we keep this here because that's all. Like, you can do this, what I'm doing here, it's not hindsight. It's not hindsight looking at it. So you can do this at exactly the same moment your candle is here right now. You can retrieve the data out of the R lens. So now we are done with all the data. So we know a time. So let's switch back to DR lens. Very important point to understand. So 5:35 is the time where average the max extension is happening. So that means when we draw this down, once price reaches this level, and at this time, it's more unlikely to reach 1.2 standard deviation. So after 5:35, the shorts or the chances for a good short are getting lower, and we don't know if we will reach the 1.5. Still, there's a chance to reach 0.5, but our medium extension target will be not valid anymore once we pass time. So once we go over this, the candles are going over this box, we already know that the likelihood that we reach the max standard deviation or the median standard deviation from the data will be not hit. So now we can focus on the chart. We have all the data, so that's all what DR Lens is giving us. So, but we are not finished yet. So what else do we have? We have volume imbalance. Right. We have a volume imbalance over here. So we have a volume imbalance over here, and this is also a volume imbalance and a gap imbalance. So let's mark them properly, how I like it. So, and we have another one here, which is a gap imbalance. So this is a double area, just because we have one here and we have another one here. And like, if I would add the other script, you would see there's more in this area, but for the showcase today, that's enough. So price is confirming to the downside, and it's coming back immediately. And I was typing in the PhD chat today, I was like, this is a setup which I always have an eye for. So very quick confirmation within the first hour of the session, and the confirmation is coming, and it immediately goes back and closes above. I'm pretty sure if a lot of you were watching my backtesting videos, you know what I'm talking about. This is normally something I'm looking for when I want to enter into a retraction. That's what I'm looking for. This pattern going below a level and going immediately back after it. On top of it, we leave the volume imbalance over here, and this one has not seen a body fill yet. So there are only two options when we talk only volume imbalances right now. Either we go up and we're retracting directly from here, so either this is not gonna get touched anymore, or when we break through this volume imbalance, it's gonna be supporting price afterwards.
Mm-hmm.
So
And
far,
can you quickly explain again the time, because people are a little bit confused. Maybe they didn't see exactly when you put the time box. So just quickly go through how you select the time. Don't show on the R lens, just say what the time is and show on the chart what you would do practically. Hello?
yes, sorry, I was muted. So,
Yeah.
so time window is 5:35 to 5:45. We got this data out of DR lens. I'll just switch quickly over there. So this field here, maximum extension median time. So that means over 20 years of data on Mondays in the ODR session. Normally we see the maximum extension at 5:35 or at 545. That means from a statistic standpoint for you as a trader, whenever we go over this time window, it's getting more and more unlikely that we will see the maximum extension target to be reached. Does that make sense, Mage?
Yeah, it does to me.
Does it make sense to the chat?
I'm checking.
Okay, let's give it a second to think about. Like I think ICT would say, let's pause the video. It's a live stream, we can't pause.
Yeah.
So coming back to the joke, so tell me a joke.
It is clear. So we don't.
Okay. So if this is clear, so that's just confluence for you. That's just like confirmation. It's confidence in your decision making when you take this into consideration, right? So now we have that. So now price is coming back. So as we see, we are breaking and we are closing this volume imbalance with one body, and price goes up and wicks again into this upper volume imbalance. So right now we can't do anything. So we see we're getting closer and closer to the time target. So now we even, like what I said, we are going above the volume imbalance. And from this point, I expect now that this volume imbalance or GIP is acting like a support for price or a no trespass area, or however you want to call it. So,
Gandalf.
huh?
This is a Gandalf.
Yeah, it could be. No, this is a Superman area now. Gandalf would be to the short, and that would be Superman now. So, as we can see, price is supported in this area, and now we are at our time target. So, as we can see now, these three candles are done now. So that was our time window. So again, this tells us if we take a short trade now, our maximum target if we want to enter into a short trade right now would be low hanging fruit. So we would maybe target, depending if I would go short here, I would most likely go for a target IDR, DR low, or maximum a new low. Just because my data are telling me that it's unlikely that we reach 1.2 standard deviation. So maybe we can take the 0.5, but I hope you're getting my point. It's like a navigation system for you. So you can make decision and you can make target selection and you can plan your trades with just so much confidence and with the backup of data, and you know always what is more likely to happen and what not. So when we were in the PhD chat, I told the PhD chat, like, there is another volume imbalance over here. So I told them before this candle happened, I said, look at these two areas. And with this candle, with the displacement what we have here right now, I entered a long trade with stop below this area. And my target was the maximum retracement over here. So I entered a little bit lower, I think. So. And this area here, so that's what you can do. You have to see the next candles. That's what you can do based on knowing that we will likely not see the maximum extension, and we are expecting the 0.8 retracement. Or at least, so market goes up, so when we reach 0.6, what you do, you put your stop on entry wherever you have your entry. It doesn't matter in this case. Wherever you have your entry point, you're gonna put your stop back to the level where we had. So it doesn't matter where it is. As soon we reach the 0.6, you know, now we are in danger, because now we are at least at the minimum retracement what we are expecting based on the data we have out of this candle here. That was our confirmation candle, and the 0.6 retracement was the minimum retracement we are expecting. So that would be another predetermined factor how to enter trades. So as we can see now, we are hitting exactly 0.6 to the tick, which is our confirmation candle minimum or medium retracement we are expecting. So either if you have a long trade here, you're gonna put it on entry, you close it out, whatever you want to do with it. That's up to you. So let's see. Price retraces a little bit and look where it's bouncing from. So we are bouncing from the midline now, from the mid IDR, and we go up to where? Again, I mean,
It can't be true. It can't be true.
Look at this. I mean, how? Somebody explain me. This is data, and like, for those who are not in the academy and for those who have not seen, I was taking this and I was telling about this before it even happened. So, and these numbers, like, they are out of the database. They are not like, I'm not just making a nice arrow there. I'm saying, yeah, like I knew this. No, it's this, like you can see it on my screen when we go back to DR Lens. It's going back to it. So this is exactly what DR Lens is telling you. 0.8 median max retracement. And that's exactly to the tick. So you enter a short trade here, and this, in this case, you can enter a trade literally per limit order. You put your stop a little bit around here, because you know that we don't want to go over that. So you can work with tight stops in this scenario. You have the confirmation to the short side. You've seen already the reaction from the 0.6, and you have now to the tick the confirmation about that. If you don't want to enter, you can enter here. That's up to you. But like, this is a trade you can take any time of the week. So targeting is either you say you take the 50% retracement would be the low-hanging fruit, because again, time is telling us what? Time is...
Prince.
Holy, I don't like that. Okay, so now we reached that, and like what I did today was taking a limit order on the 0.8 retracement, and I entered a short position here. As you can see, there is also a standard deviation retracement level from the 0.5 level from the previous RDR session. Very important. So I have my calculation based on DR Lens, which is 0.8 retracement, and I have a standard deviation over here. So wherever you want to put your stop, up to you. Yeah. But like for me, it's not necessary to, like, if price goes over this level, the scenario is already out of possibility for me. So then I'm stopped out and it's fine. When it comes to targeting in this scenario, so we have our time factor. So we already know it's unlikely that price will return all the way down over here. It can happen, but it's not statistically, the possibility is lower than it was like before in time. So if you want to take such a trade, you can go for the low-hanging fruit, which would be around the midpoint level, which I did, or then you can go for lower, that depends on you. So, or you can go for the big haul, but whatever you do, at the end of the day, if price is reacting to this, you're gonna put your stop on entry and you let it run, right? So either you have your target here, or you have your target here, or you would have it here on the volume imbalance. That is completely up to you. So, but the most important is understand what I just showed you here and what I did today in the academy is just the understanding about how it's really possible to, at 2 hours before price action is coming to these levels, to already know this level. And how is it possible that exactly at the levels I draw out way before it's happening, based on a database, based on the numbers we calculate, that we see exactly turnarounds at these levels? It already happened. You already see it at the 0.6. And for me, when I'm trading, that's already like a hello, wake up call, because it's telling me, wow, okay, I know my data are red today. That's what I know here, because there is nothing. There is no fair value gap. There is nothing in this area. Yeah? Nobody ever takes a 60% retracement. Most of the people are using Fibonacci retracements, etc., etc. So nobody looks at the 0.6 retracement of a random range, which is based on bodies, not on candles. So for me, that's already the point where I see, okay, that's looking good today. And then we go up to the 0.8 and I get the same reaction. So, and time is also confirmed. So price comes down, goes to these levels. So if you would have taken the midpoint as a target, that would be already a good trade. And now price is waiting a little bit. We get another rejection now, and look how it's working around these levels. So, and now it's something interesting is happening, and like people talk about fair value gaps a lot, and I understand why, but look at this. So, like by magic, if you would take this fair value gap, yes, it's literally in our time window. And look what price is doing now. You see that? So, but this is not the fair value gap. That's it has to do with the time candles. It has to do something with what we can calculate. This is not just a box drawn, it's calculated. Yeah? So that will be another that will be teaching in academy. But this is important to see. Yeah, and you see that. So if you're in a trade shorting this and you see this and you see the reaction to this level, then you already know that you have to be careful. So what you would do, of course, you would put your stop on entry, and I would take the profits over here, or you just stay on entry and you're playing for the big run. And then we have session end over here. That's literally session end over here now. So I don't know, like this is we have not even started with the academy, but like the power should be mind-blowing to most of you, because all what I just showed here is not me being a good trader, or me being super smart, or me predicting the price direction correctly. No, it's me using tangible data to look for trades. And it's not the goal to understand this in one day or to trade in one day like that. But that's the goal in general. When you work with DR, when you understand the concept, you will be able to take those trades. And you will take those trades not because you think and you predict, because you take these trades because you have the backup. You know that the probabilities will play in your cards. You don't mind when you're getting stopped out because you know you took a trade with probabilities. What do you think?
I'm speechless. It's the more I watch this, the more I'm amazed at what we're building, and it's available for everyone. This is unprecedented, I think, for retail.
Yeah, of course it's unprecedented, but it's like also it shows the reality. So if I can do that, if I can come out wherever people think I'm coming from, let me be the graphic designer, let me be the my FX books guy, whatever. But like, how is it possible that somebody's coming out, giving this data and showing you this, and it's working like that? Like whatever you think about me and the model, if you think whatever, it doesn't matter. But like, there is one thing which is shows you that everything is calculated. And I've worked in the industry. I've worked developing these algos, so that's why I know it. If people believe me or not, it doesn't matter. It's just like, just look at the screen. I don't even have to argue. It's just like, just look at the screen. Just look at what I showed you today. And that's just amazing.
One question I noticed,
Yes.
people are asking whether the two time frames come from the first week and the first confirmation. So that's how you derive the time box.
Sorry?
The time box that you derive.
Yes.
Someone is asking, do you take one based on the first week and one based on the confirmation candle?
Yes,
Is that how
exactly. Exactly.
Yeah.
So I already explained it in the chat. So I take this data from the first confirmation. It doesn't matter if they would be in the same time window, then it doesn't matter because you only have one data set. But like in this example, you have the week confirmation here and you have the confirmation over here, and we have two time windows. So when this is happening, I like to work with the range. If we would have only here the confirmation, I would not consider the second one anymore, and I will just look at the 0.8 retracement. But in this scenario, I have my range, so I can create a range where most likely price will go and where I will look for an entry. And this is also showing you how it's possible to get really like entries which are like unprecedented, because you have your marks. You know, you're not tempted to enter earlier because this area is the most likely area where you want to go short. So, yeah. More questions maybe.
I have no words. I think we should make some T-shirts with a meme saying "to the tick." I think that will be sold out immediately. To be
Yeah.
honest.
No, I think we need a T-shirt with the guy in the open mouth, because like for people working with this stuff, that's gonna be their face for quite some times, because you're gonna see this every day happening, and you will not believe it in the beginning. So you will look like the guy from my YouTube thumbnails for quite some time. That's exactly what it is about.
And another person asked,
Yes.
what happens, how do you do with multiple weeks below
The first one, I'll take the first one.
Okay, perfect.
So like when I'm looking at this, it's always like the first time we break through this is my first week. And then I'm waiting for the confirmation. So if confirmation would have come later, I would have to wait. I know only the 0.8 retracement, but like I would not look at it if I don't have a confirmation. So it's just really to have a proper targeting area, and we can calculate this on that. Like in this case, for example, here we have the same, we have the week and then the confirmation, but like this is happening in the first half an hour, so there is no difference for those two.
Right. Yep.
Right?
Yep. And I think we need to clarify something. So someone was asking whether the bias was long in the first place, but I think you
No.
need to explain logic again why we switched the bias.
No,
Because
we have not switched any bias here.
no,
Like,
I mean,
yeah.
because so is this the case? Then we were looking for a long bias then.
No.
Exactly, because we have a short confirmation, but I think you need to explain why we're not reaching for the bigger target on the short side, even if it's a confirmation short.
It's the confirmation short. Of course, like all the time we are looking for a short entry. But like what I wanted to showcase you here is, you know, like it's literally, forget for a second about bias, long bias and short bias, because like I think bias is maximum something to lean on. Whatever you have learned about bias, forget about it for a moment, because I have to meet yet the person who has a daily bias which is right all the time. I don't know this person, but bias is the wrong word. So what we know, we are looking for a short trade based on our data. Yes? Because
Correct.
short direction, trading to the short direction has a 48 or 84% probability when we have a confirmation here. So price going over this level has only a 16% probability. But if you look like at the range, there is a lot of range in between the two levels which will be defining for us. That's why it's called DR, defining range. Because literally inside this area, everything can happen. We can stay the whole day there and do nothing, right? That can happen. So what I wanted to showcase is you take the DR lens data, and with the DR lens data, you get literally a target for the retracement. And when I know I'm targeting a retracement, I can trade this long. This has nothing to do anymore with bias. This is just, I know price is going into this area based on my data. So if I get a good chance and rejections and volume imbalance and all of this stuff, which helps me, which tells me, okay, we are most likely going up into this pink area, I can take a long trade here. And this is not going against my bias, it's actually aligning with everything which I just explained. It's not trading against the bias, it's trading with your data. And when like people hear me a lot talking about trading in the moment. So for me, bias is, I don't have a bias. I have a mindset and I know I follow my rules. And if I see an opportunity and I know the probability that we will go up here and I want to short in this area and there is enough space in between here and it's confirming to me, because look what is happening here. I talked about this weird confirmation down here, down and up again, then not even able to break half of the body size, going back and rejecting from the DR here, going up, rejecting from the IDR, going up, rejecting from the volume imbalance. So this space here, between here and my retracement target, why should I not trade it long? Because sorry?
I'm with you. Totally get it.
So no, I want everybody to understand it. You don't have to do it, yeah? I'm just showcasing what is possible once you reach a certain level of DR understanding, that this is what is opening up to you. So even though we have a short confirmation or a confirmation to the downside, and we know we will look for a short in this area, we can trade this long and we can trade, as I did, the short trade over here. Does that make sense?
It does.
For the chat too?
I think the chat is absorbing in and they're really amazed. I see a lot of wows, so I think they get it.
Yeah, so it's not about you don't have to do that, but like I really want to showcase, this is like the first day people are working with the tools we are giving to them. Yeah, it's the first day. I'm not even academy. For everyone who's not in the academy, we didn't even start teaching yet. So all what we did today, I was like just showing this to everyone in the chat. I showed how I did it, and I wanted to go over that also here in the live stream. So these levels have been known before everything happened. So, and I think it's not so far from a logical standpoint to say, okay, if I know that with high probability we could go up into this area, I could long this even though I know we want to short. And the second factor, what people maybe think about, okay, why he's taking the trade over here and he's not waiting for the longer target. And this is time related, because with passing this time signal for this specific day and ODR session with the specific timing. So this is not a general rule, this is based on the data again. So based on Monday, ODR confirmation at 4 to 4:30 and 4 to 4:30 to 5 o'clock, we need our max extension. So max extension is the goal we have down here, is happening around 5:35 to 5:45. And as you can see, price is not doing it. So I know most likely when we are here, I'm not going to speculate for a deep coming down in this scenario, just because it's not supported by my statistical data. What I can do as a trader is saying, I'm entering my short here. I'm entering my short wherever, somewhere here. If you don't have a limit order, let's say you're entering on this candle, you put your stop up here and you say, okay, you can go for this, that's not a problem, but the likelihood is smaller. But it doesn't matter, because like if you take this trade, the moment we come down here and prices and time is getting closer to 8:30, what you do, you just put your stop on entry. And either possibility that we go down and your target will be filled and you have whatever 10R or 5R or whatever it will be, or you're getting stopped out. You know, there is no need to take any risk for setups. That's what we are trading. We are trading probabilities, and probabilities means that we have a good chance that our setup will work out, but it's not a 100% chance. So what I'm giving you is entry points which are very valid. So no matter where you enter, forget about the long trade, you enter your short trade over here and that's fine. And then you leave it, you take profits or you don't take profits. But you're not gonna lose with this trade. So if you do it the way I just explained it to you and you execute it the way everybody in Academy will do in the future, you're taking a trade and you either take a profit target over here or you let it run and you just accept that you're getting stopped out on B, and it doesn't matter to you because you know exactly that the next session is coming, you're gonna go back to your DR lens and you're gonna check the data and you know you're gonna get a setup with a very, very high likelihood. So again, when we're talking about targets, for everyone here, 7R is the target. Just this weird ADR and ODR had a potential of, I think this was 5R, this was 2R, the long trade, and this was 3R. So just those examples I said, that like was a potential for just ADR, ODR session of 8 or 10R. And these are not trades which are like, wow, I'm such a good trader. That's for me the most important point for the people to understand, that these trades and how I look at this and how I would trade this are based on facts, on data. It's not me, master, being the kick-ass trader. No, it's me using my edge to a level where I will always beat the market or anybody who's trading against me, because they simply don't have it.
Another question
Yes.
is, how much do you look on the data information like contraction model or any other model before the session, or do you look at it at all, or only if they form?
No, I'm doing this for over 20 years. So like for me, I am looking at everything, of course. Like I know the higher time frame, I know how the models are looking like. That's, for me, that's like normal. For me, I'm so trained that I know exactly what is happening. So we see, for example, here, I know that this level where we are retracing from is not only what I marked here. And when I'm talking about taking a short, my area of where price likely will go if I want to short that is the previous IDR and ADR session. DRs, yeah?
Yeah.
So, and like when I talk about the confirmation here being wacky, and you see why? It's not only the volume imbalance, it's not only coming down, going up again. It's also, look where we're rejecting from. So there's so much information in price action. It's, yeah. And if you look at the model, for example, so look where we are. So look how price is looking. Like, you just have to open your eyes and understand what price is doing. So look, the cluster over here. We have the cluster over here. So you see how it's overlapping? So yeah, I'm looking at the relationship models, but like today anyway, today is a holiday. So normally when you just look at the relationship between the models here, so this would be a downside expansion model, right? So that's why we want to trade short. But we know that we have holidays, so RDR will not give you, we are closing at 10 o'clock my time, so that's New York time, I think 2 o'clock or 12 o'clock, I don't know. I think 2 o'clock New York time we close today, right?
Yeah.
Yes.
Wow.
No, 12 o'clock, 4 hours. Yeah. So today is holiday anyway, so we know that there will be nothing happening, and as we can see, nothing big happened at the end of the day. So literally, yes, I'm looking at the models, and we will teach also about that. But yeah, I hope that answers the question.
Yeah. And some people were wondering how often you update the data. And I mean, the data is from 2005 for ES, and it's updated daily. Every day at the end of the day, we run a script and we update the most recent data. So it's always up to date.
What doesn't have to be, because it doesn't matter if you have the last day yesterday, because like we are mainly working, as long you're not using this button. So as long you're not using this filter here, which is not working for me again, but as long you're not filtering the data set, we will talk about filtering the data set to get a little bit more data, which are actual data. But all what you have seen today and all what you should base in the beginning your decision making is anyway on 20 years of data set, so it doesn't matter if there's one day more or less inside. But like, it's getting updated anyway any day. So yep. More questions?
I think people get it. People are wondering whether they're gonna get US 500, US 100, but I think it's better to keep the pure data, like the mother of the data, right? Because those points are...
That's very important. So I said this already so many times. So if you're really serious about trading, you can't use any CFD data, whatever you call US 500 or US 30. This is not good data. And if you don't know why, you have to check it, and you have to understand the difference between a future contract, an index, and a CFD. Your CFD price, whatever you're looking at, when you're looking at the US 500, you're literally looking at a manipulated data feed from your broker. This is not the real data feed. So whenever we are talking about SPX or like the S&P 500 index, which is the mothership of everything, yes? So that's the most important price. And this index can't be traded. So the price index, or the price for this index, is calculated on the shares inside. And when we have the regular trading hour, every price movement inside the stocks of the index is making price change at the index level. And based on this changing, what we have here, the future contract is changing its price. So the future contract, the ES contract, is based on what the SPX is doing on a stock level. price is not made on a future level. Price is made always on the stock level. Overnight session, it's different, but like that's where price is made, and that's where 90% of the volume over a day is happening during the regular session. And so these are the two only things you can take for trading. If you trade, if you for your analyzing price, it can be only these two data. It can be either the SPX or the ES future. Same goes for Dow Jones. It's either the Dow Jones index or it's the YM. And for Nasdaq, it's either the Nasdaq or it's the NQ, which is the future. If you're trading with a broker, with a CFD broker, that's not a problem, but you should look at this real price data. So if you trade the ES or the SPX or the S&P 500 on a CFD broker or with your funded account. So you look at the ES data, you look at the same, what you see on my screen, on my screen. So if you get your confirmation, let's say you're trading with a CFD broker or with a funded account. So here you have your confirmation, and now we have the retracement back into this. And let's say you see or you want to take a short trade over here, yes? So you base your trade decision based on what you see on this chart. And then you just switch to your whatever, let's say US 500. So then, well, let's say you're trading whatever, you're taking this data. Hello, data. You see the difference? What is this? It's close because it's US 500. Where is the CFD? Maybe this one?
Oh my God.
That's looking super weird. So you see that? You see the difference? So you can't take this chart to make a decision making, because like this chart will tell you confirmation, bounces to the upside, and then returns. So what you do is, let's make it like this. So that's what time, we are going by time now. So this is happening at 12:35 on the real ES. That's where you say, I want to look for a short, yeah? And if you have to trade the US 500 we just looked at, was it Pepperstone? I think so, yeah. So 12:35. So what is happening on your weird CFD broker, which is trying to get some money out of you? So this is the candle we look for a short, and that's the next candle. So literally for your broker, you would take your short position over here, adjust your stop, whatever, and your target would be a new low over here. But your decision making is, that's a weird example, because the price difference here is most likely because of because we only had a half day. So it's normally it's not that significant on a difference. But you already see here confirmation long, confirmation short, which we don't have in ES. So if we go back to ES, we have no confirmation to the long side. We only get the short confirmation. That was the 35 candle. And while the CFD broker went up here, the normal market is not doing that. But I hope you understand what I mean. So never ever look at any data else than ES, NQ and YM for the equity indexes. Everything else, it's really dangerous and it doesn't make sense.
Okay. Can we use this example to clarify what 0x retracement means? Because some people are confused.
Yeah.
Or thought that when you said zero retracement, you meant that there's no retracement at all, but the data is a little bit different. When you see a zero retracement, it means that it's going to retrace to IDR. So in this case, this is exactly a zero retracement. This is exactly how a zero retracement looks like.
Ah, well, yeah, but I think that's clear, no?
No, people thought that you meant there's no retracement at all. I'm just reading the chat.
No, like zero retracement, so everything inside here is a positive retracement, and everything below this IDR line is zero. So this is the zero line.
And if it's negative, it means it retraced below.
So yeah, maybe we should clarify that. So this is zero retracement in the case that we have, so the IDR means zero retracement. Then we have the other IDR line would be 1. And let's say, sorry?
No. Yeah, that's correct, yeah.
And here, so this is minus 0.5. So let's say this line would be then 0.25 minus. Makes sense? Everybody understands that?
Hopefully. Let's do the 0.5 as well. The minus 0.5.
Sorry?
Let's also do the minus 0.5, which corresponds to the standard deviation.
Yeah, we don't have to make this because it's already here.
But just pointed out, very clear, that's the same. That's negative 0.5 retracement. It means
Yes.
point.
Yeah, but like everything, like the standard retracements are anywhere there. So like you should understand that this is positive 0 and this is negative 0. That's why we start minus 0.5. So this is the 0 line, and there where our retracements are starting, and the other side to the top. So if you have a long confirmation, it would be literally like that. Correct? Mage?
Yep, correct.
Yes. So, yeah, I think that's not that hard to get. But anyway, we're gonna go over this like till you can't see it anymore. So
I think some people still didn't get that the CFD, they think that DR lens is not useful for CFD if they're trading the CFD data, but I think the point that the master was making is DR lens, it's all you need, and you need to trade looking at the ES chart. You don't trade looking at your US 500 chart because that's manipulated. So your mothership, when you trade, no matter what instrument you trade, is always the S&P 500, the SPX. That's your base reference model. That's where you decide and frame your trade. And then based on the triggers that you see on the mothership, then you action your funded account or your US 500, your CFD account. But it doesn't mean that DR lens is not useful if you're trading a funded account. Did I explain it correctly, Master?
yeah, I don't understand the question. We should be at a point that like everybody's understanding. Like the CFD, like it's like what is a good example for that? So you're analyzing price and you're making trading decision. You can't base them on fake prices. So that doesn't mean that like you can't trade it. It's just like your decision making whenever you decide to take a trade, the trigger is coming from looking at S&P, at the ES. So when you see this level hit here, that's when you switch to whatever broker you're using or funded account and you press short. And you take this level, you put on your CFD broker, you put this level as a stop and you put in whatever you have as a spread. So I don't really understand the question. It's just like you can't analyze weather data which are not weather data, and you can't forecast the weather based on wrong data sets. That's just like, it should be common sense that when you analyze something, you should use the data from the source and not some manipulated feed from whatever broker you're using.
I think it's clear now.
Yeah.
And it's the same for Nasdaq. It's the same for Dow Jones. It's the same. It's the same. People are asking whether we're gonna add currency pairs or other instruments. What do you think?
Yeah, I think we will do that. Like, well, shall we?
I think it's a good idea. I don't know if people like that, but yeah, I think it's sounds like a good idea.
Definitely. Maybe you can give them a short outlook what we are planning to do. Like what are the next steps? Like when we are adding those numbers. And I'm gonna be back in 10 seconds. So you have the entertainment on your side now.
Okay. Are you guys excited to hear about the product pipeline and future development? There's so much we can do. I'm really excited personally. Well, first of all, the very easy things to implement is to include more data, so more indices if there are, more currency pairs, Bitcoin, gold, crude oil, all of that. But we are not going to roll everything out because we need some steady growth. We need to see if people are really interested and they really need that kind of data. So maybe it will be based on popular demand. So maybe we can do some surveys, polls in Discord, and whatever instrument gets the most votes, then we can include that in the next release, which might happen in early February. And then in terms of product functionality, there's so much more we can do. We can check whether the IDR confirmation, which is the early confirmation, is the same as the proper confirmation. So you get an even earlier signal whether DR is going to be true or false. And it's going to tell you what percentage of days the IDR confirmation is on the same direction of the DR confirmation. And it's also a true day. So this is very exciting. I think once we have that, Master will give us even more tricks on how to frame a trade. And then the thing that will take some more time, but it's in our dreams, and we wish we can bring it to all of you, is to create a backtesting platform where you can literally select some setups like the retirement setup or retracement to 0.5 middle line, and the stop loss to a certain level that you decide. You will have some filters to select, and then literally print out 20 charts with the last 20 setups that showed this exact setup, and people can just download it, take notes on it, and just learn how the setup looks like, anticipate what price action will look like after you enter the trade. And I think this would be amazing, and this is nothing you can find anywhere else. What do you guys think? I saw people saying, "Stop, I'm gonna faint." Okay, so this is a nice feature. Okay. There's so much work. We are also working on improving the stability of the platform. As I said yesterday, it's only two guys, and I'm not a developer, so I have to learn, the hard way in a very short time frame. My friend is a good engineer, so at least we have a good technical guy behind this. But we are still we're not a tech company, so please bear with us if for some people the connection is slow sometimes. If some regions are still not fully available, we're working on that. There are a few things that we found out online which might help, but please, I really apologize that it's not a smooth experience for 100% of you guys yet, but trust us, now that we know the excitement that there is for this product, and now that you see the capabilities, what you can do, we're gonna double down, triple down, quadruple down, because we know we're gonna deliver something that people will love. So we can spend more money on more technology, and we can hire people to help us fix networking issues. So bear with us, please. Again, I'm really sorry that a lot of tickets in these days talking about the connectivities, but we'll do our best to give you the best product possible.
Perfect. Yeah, we're gonna do that, everybody. understands that I think we are gonna, till we start with Academy fully fledged, everything will be smooth. That's anyway something what will happen. So what do you think, guys? We're gonna go now to a normal backtesting session. You wanna do that?
Let's do that.
Okay. So we're gonna make it a little bit entertaining because I will ask Mage what he would trade, and we're gonna see what's going to happen. So we take all the fancy stuff out here. We don't need this yet. Gonna go back to classical backtesting DR, IDR. For those who are not in the Academy, and for those in the Academy, that's still a learning experience. So somebody asked me I should backtest, I think, the 19th of December. So let's figure where we are. 30th. I'm gonna try to hide the price, but I have a very good memory for price, by the way. So it's not really fair, but that's not the point of doing it. So somewhere around here, let's pick a point. So let's switch to the next session. So what we have here, that's 8:30. So we are starting with Monday. Yes? Did you say something? Yeah, we are starting with an RDR session on Monday, the 19th of December. So who wants to do this together with me and Mage? Jump to the 19th of December, 8:45, and let's do this. I'm gonna tell you, this will be a crazy backtesting session because the time frame somebody chose here, if you remember, that's gonna be nasty, nasty, nasty R's. I know that.
Do it.
Okay, let's go. So let's look what we have before the RDR is starting. So now I'm explaining again everything about what I can tell you. So we have RDR sessions. So the last RDR session was very big. We have the ADR after the RDR forming inside the RDR session. We have not a range expansion model to the upside because we are having the RDR or the ADR low, ODR low below the 50% of the ADR. So we know it's not a range expansion model. We know we are inside. That means we have a squeeze, so a contraction model. So what are we expecting, chat? Squeeze means what? Trompete kostet Knete. So, so what we are literally expecting here is price action similar to something like that. That's the price action we're gonna see most likely, just that we are aware. So that's what we already know, just based on part 3 of the DR IDR model. And let's get started. So our RDR is starting, so we're going price lower. We have sell side liquidity was taking here. Here is another equal lows over here, so sell side liquidity taken here. And we continue and we see if we will get something nice here. Another 3 candles. So you see price is very volatile, so we come down, and after taking out this equal lows over here, we are bouncing back to the upside. Wow. So DR is finished. So what do we have here? Mage, your turn.
My turn. Okay. So price closed near above the open. So that might give you an early indication that you might look on the long side.
Uh-huh.
We said we're looking at a contraction and then range expansion with a trompete. We just took liquidity. It came back up.
Uh-huh.
I would just, for now, I don't have any like elements to enter directly.
So you want to wait because like here there is nothing interesting at the moment, right?
Yeah, and also price extended in V shape very rapidly, so I would expect it to chop a little bit rather than keep running.
Okay, what is the relation? So like we had a ADR which is confirming to the downside,
Yeah.
right? Then we have an ODR which is confirming to the downside.
Mm-hmm.
What have we taken out here?
Sell side.
Here? Where my
Buy side liquidity. So buy side.
buy side liquidity. Exactly. So what about the idea that we are rejecting maybe from these levels and we want to take out this one, which is also the 0.5 standard deviation from the previous RDR session?
That could be a possibility.
Okay, so that possibility is for me worth a trade. So I have a cluster over here. This is all areas where price can bounce. I have already 3 times rejection over here. I'm expecting volatile movements. So for me, I'm gonna enter a trade over here and I'm gonna look for the 0.5 standard deviation of the previous RDR session. So when I'm talking about cluster of RDR lines, this is what I'm talking about. So we have this one, the ADR low plus the IDR ADR low plus the middle lines over here, and these middle line, the 50% line, is magically aligning also with the IDR level from the ODR and the low. So all of this area is very, like you can call it very hard trespassing area. So as you can see also, we already get the first clue that this area is an important area with these candles here. You see that?
Mm-hmm. Mm-hmm.
1, 2, 3, 4, 5 candles telling me this is an area where I have my DR levels and I see price reacting to it. So that's why I would like to test a short trade. So we need our usual text window. Now we take an anchor text, as I learned. So trades, winner, loser, break even, win rate. So I take my first trade and clone. Gonna make this the master, and this is going to be mage. So we're all set up. I think we don't need our statistic window for this. So let's turn this off. Yep. Okay. So rejection is happening. That's nice for me. Anything you want to do, you stop me, okay?
Yeah.
So we are going down to the IDR levels, still no confirmation on this day. I'm very confident my stop goes on break even. We are reaching the 0.5 level over here. So now we get confirmation. We are reaching the 0.5. I would die for a look at the DR lens right now, by the way.
Yeah,
But
people too. They're complaining why we're not using DR lens.
yeah, they
Right.
can do used lens as like testing for them.
Exactly. People go on the platform and put the parameters in and see for yourself.
So anything you want to do?
I want to see how it reacts to the lower DR now. I like that reaction.
Take your time, think about it.
I might think that now DR is gonna be, could be supportive of price, but I need another candle.
Okay, there you go.
Well, and now I'm confirming that it's not supportive of price, so I'm glad I didn't do anything.
So I am out of this trade. I got confirmed. One winner. 0 loser. Break even 0. We have forgot our R. 5. That's 5R right now. So why you wouldn't take a trade over here? Because you said you wanted to support price, but we have a confirmation to the downside, right?
Yep.
So why would you not take a trade here? You would have waited for the IDR levels to be touched?
Yeah, ideally, like because I know the stats that there is a high chance of at least touching it's touching the DR actually, not the IDR. So
Yes.
it's just a mistrade or miss opportunity for me.
Okay, let's see. So prices is extending more. So what I see here, I just mark it out just in case you don't see it to the viewers. So we have a volume imbalance up here. So if I think about price right now, I would expect price to reach back into this volume imbalance. And I would be willing to take a trade around this level. So once we fill this volume imbalance over here, I would be ready to think about another short trade. So we get a beautiful, beautiful rejection over here. We are filling the volume imbalance over here. Anything you want to do?
Let's go for a short.
Okay, Mage is taking a short. So close of the candle is here. Where is your stop loss?
Above 2 ticks above DR.
DR 1, 2 ticks above. Target?
New low.
New low? Okay. So Mage is taking a trade, and I actually want to see the next candle, which stops you out. So one loser. R -1. Yep. So I want to see another candle, I think. Okay, do you want to do something?
Re-enter short.
Okay, another short.
That's juicy.
Sorry?
That's too juicy. The reaction
Stop.
to the 2 ticks above those high. Yeah.
1, 2. I agree with you. I will take the same trade. So,
And
yeah.
I wonder if the target is 1.5, I would look at DR lens for the targeting, but either new low or maybe a partial at new low and then let it run.
Okay, so Mage wants to take a partial over here, and then he would go for another partial over here. I personally would be happy with the new low, so I'm not going for anything else. So mine stays here and he's going for that. So let's see. That looks good. It's even better. So my stop goes on entry. How about yours?
Same.
Same. So we both would be stopped out. Yeah. Both of us would be stopped out. Break even, one, nothing changes here. 2 trades for you. 1 break even. So let's see. Okay, I re-enter. Same stop like before. 1, 2 ticks above this high. Target, same. Same for you? Yeah. Target the same for you, so partial here and partial there?
Yes.
Okay. So very nice rejection from the volume imbalance, as you can see. So price is not strong enough to go above it right now. Another nice rejection. We are rejecting again. Volume imbalance over here, inside there. I'm not marking it. So my target is done. 2.5 R, so that's 7.5. Trades 3, 2 winners. And Mage has already 1.5 when you're taking half partials, right? Yeah, okay. So he has 1.5 save, and I think you go on break even, right?
Mm-hmm.
Okay. So, and there is your second fill. So 1.5 plus 2.2, let's say 3R, okay? We are not calculating too gross. Winner 1, and you go to plus 2. Done. So not even like you were right with the 1.5. It's even looking like we are going lower now. So we are at the 2-point level. Let me see what we have on the left. Nothing. So as you can see, there is no price action in this area for a lot of days. So I see a cluster over here. We have this standard deviation almost matching this one. So let's see what price will do here. So we go below, and we even reach in 2.5. When you want to do something, you let me know, right? So 2.5 standard deviation level seems to be holding right now. Time is telling us what? That's a nice rejection from over here. So we can remove this. Price goes above. Time-wise, it's 4 o'clock, so no more trades for us. Remove drawings, next session. No. I just removed our text.
Oh.
Can
you do Control Z?
Is that working with Control Z? No.
Oh, yeah.
Wow. Good. Nice. So that was the RDR session. So we are not trading the ADR session as usual. Or you want to trade it?
No. I sleep in the ADR.
Yeah, me too. But let's have a look. So ADR outside the RDR session. Oi.
Ooh,
Okay, nice extension to the downside. Not really predictable. I mean, for me it was more looking like a IDR early indication, but then like, I don't know what happened here. Something happened here. So price is dropping down. Not really any chance to enter into something. For standard deviation. So now we are coming to the ODR. So we get direct confirmation, not yet. Okay. So we almost retraced whatever was bringing the price down, and now we have a confirmation. So we want to look for a long trade. Problem what I see with long trades at this moment is this area up here. So let's see. So nothing for me in here yet. So just a shallow confirmation with a slightly close above the DR. We go below it, we stay below it for now, as you can see. I think everybody can see that, I hope. So shallow confirmation, we are going down and now we are not able to close above. We have several volume imbalances over here. This one should be also not filled yet. So that's, let me see, is there nothing? No. Here, that could be an interesting area. So there is 2 in 1. Okay.
Yep.
So my plan for now, as long like this stays like that, we are rejecting from over here. So I would expect price at least come down to this level, preferable maybe to this volume imbalance, and if we are super getting lucky, maybe around this volume imbalance. So let's see. Still rejecting from the DR levels, so nothing yet. That's standard deviation level, but we still have the volume imbalance over here. Rejecting again from the DR. Now we're going above, but we're rejecting from here now. Again rejecting.
Nice.
And we go back below, we are closing below, so nothing for me to be confident. So I hope everybody in the chat sees like that there is really not a sign which makes me go long, because we are rejecting for 4:30 until 6:30, so 1.5 hours we are rejecting from DR levels. So that's not inspiring to me. especially with the volume imbalances below here. And then we break through and we're getting rejected from the ADR low. And we are doing the same, we are going below again, we try it, we're not even reaching the low DR from the ADR and we're getting rejected again. We are closing again below the IDR levels, we go up and we are closing again below. So that doesn't look like anything yet. See if we can... No, it keeps rejecting over here. I think everybody can see that. So it's almost 7:30. So nothing until now.
I see a volume.
Up here, yeah. So we have two. We have one here. Here is one. Here is one. So this is like a cluster now of volume imbalances. Here is one. Here is one. So 1, 2, 3, 4, 5 volume imbalances. I'm not marking all of them out. So now we are getting to the first volume imbalance. We are closing below, it's 7:55. You want to do something here?
It's too...
It's too late, you say? Yeah, I agree with you. So let's see. So now we have to have a line over here. So this is the extension from here. Let's mark also this one out. So we keep rejecting. That looks, well, let's see some more candles. It's 9:20 now. So this is opening of RDR session. Going above here. Getting rejected from this level now. So as you can see, like we're getting rejected, 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 and we are not really bouncing from anything significant to the long side. So generally, this scenario is still true. So we have a long setup here, or we're looking for a long setup. But price is not giving us any setup. So let's see, now we are at the 50% levels here. So this is the volume imbalance over here. So let's see what is happening. I would be willing to look for a... So now I have to draw this out. So we have reached over here. And I think... What do you want to do?
I like the bounce.
You like the bounce? Me too.
Let's roll.
So, okay. So both of us are taking a long trade over here. And stop, I would put where you want to have your stop.
2 ticks below the low.
2 ticks below the low. 1, 2 ticks below the low. I go with the safe version and I will have my stop over here. So aligning with the standard deviation level. So yours is 1, 2 ticks over here. Okay. And my target would be... Yours would be where?
0.5 above. Well, we don't have 0.5 yet. New high.
New high? So here or here?
That one.
That one?
No, actually the one above, on top.
Okay. So new high. Yeah, I go with you. Yes. Same for me. Okay. Let's see.
Boom.
Boom. 4 trades, 2 losers, and +1. So mine is here, I'm still in. Okay.
Done.
Done. 4 and break even, no. 10.5. So that was a nice trade. Unfortunate with the stop, but it's okay. I mean, at the end of the day, like when you take this stop here, like when you really take these middle points, it's always good to align your stops with some significant levels. Like that's a general tip from my side, that you have your stop levels around significant areas. So this is like you could go, but like if you want to take this, then it's fine. So I don't disagree. But like if we enter into like an area where like this area here, it's literally no man's land except the volume imbalance. Then always maybe align your stop with a standard deviation or with the opening line. There is also another volume imbalance, so that would have been another area where you could have your stop. So that's just that. So
I think let's appreciate how these little nuances make the difference between a trader that can take good entries but has, suboptimal stop placement, and once you fix a few things, then your profitability can literally rocket over in a very short time frame.
what is more important for me is to simply, the nuances, but also the difference between, like, still, you had like already 2 unlucky trades, right? So you got stopped out in the other one and stopped out in this, but still, even with 4 trades and you only have one winner, 2 losers, and 1 break even, you're still positive, right?
Yep.
And like looking at you as a trader, it's like you're already taking good entries. So the margin which we have to work on when I would be with you right now it's just to think about, okay, where to put stop losses and where does it make sense. I think setting stop losses is a very important skill to learn, and that will come also with the time to understand that you can take this trade, but literally you would have to re-enter here. I mean, we are not using a 1-minute chart, so we make it harder than it would be for us. But the entry was good, and the stop placement was not completely wrong. It was just a little bit too tricky in this situation, I would say.
Too greedy.
I wouldn't call it greed. I mean, like from the logical perspective, I understand why you put the stop over here. Yeah. The only thing which kept me away is that like I was expecting price maybe even coming back here. So I that's what I was thinking when I saw the candle. I would expect a price go into this volume imbalance, and I tuned my R with my stop over here. But like if I would have been stopped out here, I would have re-entered with stop below these 2 lows. So because then the setup would be completely covered for me, I would have risked only 2R for the whole scenario I had in my head. So if I would have been stopped out again, I would have taken the 2R and would have moved on. But like that was my thinking process here. So okay.
It's like a chess master. You already have everything pre-planned in your head. It's just not one single trade. You know exactly what happens if you get stopped out. You know what's the next step. It's not like you take a trade and watch price. You already know exactly how to react to the next scenario.
Yes, so when I'm taking a trade, and that's a very important point, is like I'm looking at price and I'm thinking about, okay, what is my worst outcome and where my scenario goes overboard. So I know that whenever I place my trade and my stop levels is anywhere here, I have the risk that I'm getting stopped out, but I have to re-enter again, because my scenario is only like the scenario we are trading right now, or we have been trading, will be overbought when we close below or when we go below this line. Yeah.
Yep.
So as soon price comes here and closes below here, I would call this scenario a fail and we are done. So, but everything in between here, I can't be sure. So when I'm placing a trade, I am thinking in my head, do I want to enter here and put the stop over here? No, I don't want to. I rather take 2R risk for this scenario and tune my stop a little bit. So I'm using one stop which covers this area, and if price goes below that, because like if we go below this standard deviation, I would expect to fill this volume imbalance, or at least bounce from this volume imbalance over here. Yeah.
Yep.
So when I have my stop here and we break through that, I would be pretty confident that we will go to this level. And then I get another good entry because my target is up here. Yeah. So I get stopped out with 1R, but like I would re-enter here and I would have my stop 2 ticks below here and the new high would be here. So I have a better win or a better risk to reward ratio, and I can cover up my 1R loss. If I lose both of these trades, I'm done, because scenario I wanted to trade didn't come through. So I'll take my loss and I move next. If that makes sense.
Yeah, totally.
But that's something which you train. I mean, like, that's not something it's always my thinking process. I always think about the scenarios and about the probabilities, how things can happen. And that gives me just the confidence that I know, okay, if I get stopped out, I'm going to re-enter. I already know, even when price is never coming there, but when I enter this trade, I already have the plan for what is happening when price is going below my stop and where I would look for another trade.
Yeah.
So now we have RDR closed and we are having a weak confirmation, I call it that, as you know now.
Mm-hmm.
And now we have a real confirmation. So we would be looking for price to go where?
To the long side.
To the long side, correct. So do we have any volume imbalances here?
We do. Okay. And would you use the week and the confirmation to calculate the time range of the median extension?
Yeah, but like in this case, it doesn't matter because they are all in the same.
Right. Sorry. Yeah. Correct.
So somebody is jumping in our Discord channel, I think so.
Yeah. That's fine.
So as we can see, confirmation. So now we want to look for a long trade. So I see a volume imbalance over here. What areas would be interesting for you to think about an entry?
I see a very big candle, which is
here.
Yeah.
Or here. This one.
Yeah, the bigger one on the lower side. But
okay.
I think it looks too one-dimensional, directional. So, and I don't like the price immediately rejected when it confirmed.
Mm-hmm.
So that's, to me, it's a early signature that I want to be cautious and see where price reaches.
Yeah.
And then I would also look at IDR and ADR with the previous level. I think the midpoint aligns with those levels. So I think once we reach at least the midpoint, I would maybe see whether we that point.
So for me, like when I look at this, like I would pay attention to what is happening here. The next area where I would look like is this, just based on standard deviation midpoint. And then of course the areas we already used for the other trades. So here, and of course this area here. And this candle, I don't know, I'm not sure yet, but I think this would be the area I want to see something, and I would prefer, because here is a volume imbalance,
Mm-hmm.
so I would prefer an entry around this level. So let's see. Nothing there yet. Go directly below this. So these two areas were broken, so not interesting anymore. We leave a volume imbalance over here. We have a volume imbalance over here.
Ooh.
So big candle down, we are closing the volume imbalance and we are rejecting from the opening price, which is the green line. So I think
I entered.
Yeah, me too. For me, that's the go. And where do you want to have your stop?
Okay, let me think carefully this time rather than be mechanical. So we got the yellow line on the left. I would put it I think 2 ticks below where the volume imbalance is on.
This one?
Yeah.
So 1, 2,
Make it 3.
3. Okay, I agree with you. I was just thinking I would maybe take the open price. But yeah, I agree with you. This is a good area. Yeah. Or I will put my stop 2 ticks below the open price. So 1, 2, and you have your stop, that is my level. And yours would be here. So for me, why I'm putting my stop over here now is just simply same like I explained here. So either we bounce from here, that's a good level to bounce off. Open price normally is a very important, significant area. So for a long scenario, I want price to stay above the opening price. I look at this volume imbalance over here. So I would be confident if we break through this, I do think we will go lower, and then I would look for a trade with a stop loss below this, like you see these lines, what we have here, plus the volume imbalance.
Mm-hmm.
So if I get stopped out, I will look for a re-entry and maybe place my stop over here. Okay, so let's go. So both of us getting stopped out. Five, 3, plus minus 0, and loser 1. Did I miss one trade of mine? Because it should be 5. I should have the same, I think. Anyway, not so matter. 9.5. So nothing for me to enter. I think we will go lower. Maybe we'll touch this area. So do you want to do something? Volume imbalance over here, by the way.
Kind of bounced to the yellow line that I mentioned before.
The volume imbalance here? I can draw this out for you if you want it.
I'm actually gonna I'm gonna take a trade here.
Okay, long, stop.
Stop at IDR, I think. Or yeah.
Target.
Get new high.
New high, okay. I'm not sure. I think we will go lower, so I wait for a second. So nice bounce from here. Do I want to take this? I'll wait for a second. Nice. So now we see 2 times. So we crushed below the open price, but immediately rejection from here. So retaking this level, you remember the first trade we looked today where I said the confirmation was wacky. So this is the same setup. So we break below this level, we close, but immediately price reacts and then stays above it, 2 candles. So that's definitely a very nice setup. So let's see if I get a chance to get in better. No, not really.
Volume imbalance left, though.
Yep. So now I have to take it. I waited too long. Backtesting doesn't matter. But what I would have done in a real scenario, I would have taken a trade here or here inside this volume imbalance. But we are backtesting, so I don't have live setup. So I have to take a trade over here, and my stop level will be below this level now. Target the same like yours. I can't take this trade, it's not 1 to 2, so I'm out of this.
And break even now.
Yep.
Okay.
Okay. You see, like, anybody sees why I'm thinking about taking a trade here? Anybody in the chat can tell me why? Why would I think about a trade right now? You checking the chat?
Yep. I think there is a bit of a lag. There is a cluster rejection possibility.
Cluster is right, yes, cluster, I agree,
Midline.
but there is something... Sorry?
Midline.
Midline, yeah, also right, but there's something even more, like, which is even, like, I see the cluster and I know the cluster and the midline, that's completely, but there's one more detail which I see, which really tempts me to hop into a long trade right now.
Volume imbalance.
Yay! So, exactly. So if you look now, look at this. This one here, and look at this.
And there's one in the DR as well. Yeah, that one.
So 2 times cluster here. We have this cluster lines over here. We have the 0.5. So I am going long directly. Stop.
And I add my position as well.
Sorry?
I add to my position.
Okay, my stop will be 2 points below the mid. Yours? Same or?
Same.
Same. Okay, my target will be also a new high. Suck. Okay. So stop again, stop level. Yeah, so we have now 2 volume imbalances which should, so price should not go below this anymore. That's my opinion. So we have the DR levels over here, and we have another standard deviation level over here. So price should be really not coming below this anymore. So if you want to be on the safe side, here is another volume imbalance. If you want to be on the safe side with your stop, you put it below here. Yeah. But then you cover these 2 lines, you cover this volume imbalance, you cover this volume imbalance. So there's like a lot of cluster here which can support your trade. Okay, I leave my stop where it is, because I'm pretty confident that we will go higher. And was that a new high? Yes. So new high, that was a nice session for you, mate. So that's 4 and 4.5 for you. That's 8.5 for you. 6 trades, 2 winners. And what did we say? 3.5, 4.5, so it's 4, it's 8.
Yeah.
Plus 8. Nice. And for me it's 4.5. $14. That was good. And as you can see, like, I mean, my statistics look way better, but as you can see, like, one good setup, like, that was like literally the whole RDR session was beautiful. Mage even took a stop loss here. Both of us took a stop loss over here. He entered based on what he saw. He used the wide stop for the first entry. And like one good session is catapulting him to plus 8R. And these trades are very logical to take. So even though he has a win rate which is lower, way lower than mine right now, he's still almost at the same result as me. Just based on taking the right decision when there are good setups. That's amazing.
Yeah.
Okay, it's 1:30. We're already 2.5 hours in the game. So I would say we are doing another ODR and then we call it a day. What do you think?
I agree.
Okay. So time is not giving us anything. So as you can see, we take out the liquidity over here. We are now in this area. Look where we are rejecting from. Here. So nothing for me to trade. I mean, like when I have a session like that, I'm not interested to trade for the rest of the day, to be honest. But for the backtesting purposes, we're gonna see if we see anything interesting. So now no bounce back. Here is a volume imbalance, but it's not rejecting. Another volume imbalance which is not getting respected, or yeah, closely, it's okay. So now we are coming back to the same area where we took our second position, and I would not take this trade in a real scenario, because I would be just happy what I had here. But for backtesting, I'm gonna entry again. Yeah, I'll do that. Target would be a new high. Stop 1-2 ticks below this. That looks good to me. You want to do something? No, you already have seen my trade. You're not allowed.
Exactly.
Now, if you want, you can say it. It's like...
No, I wouldn't know that.
Okay. So everybody understands my reasoning. So we are getting literally the same setup presented we have taken before. So here, all the volume imbalances over here and the lines over here. That's why I take this setup again. So we are reaching DR, IDR levels. How much time we have?
Not much.
So it's the last 15 minutes. So technically, if you remember correctly what we talked about yesterday, there is a 62% chance that we should go over this or close at least in the last 3 candles. So I'm trusting Mage's numbers now because it's end of this session, so I change my target to this. My stop goes on entry. And let's see if we are lucky and we have the 60% today. Nope, nope. And stopped out. So break even for me. So that's it. Let's wait and let's go into the ADR session now. If I would be awake, I mean, like the whole scenario here is still valid. So I would be looking still for long opportunities right now if I would trade it. But like we are not trading the ADR. But my stop out was just because of break even. So seeing this rejection, going here, rejecting here again. Here is again our volume imbalance, what we had before. Here is the DR levels again, which is, I would like to show it to you completely. So if I would to trade, like this would be an area I might consider taking another entry with the stops below here and see if this was just a quick stop run and we will go higher. So we have an opening gap here now for the ADR session. So as you can see, price is coming up now, going up here. I think I remember this day. I think we are bouncing from here and we go higher. Yeah. That's not fair. So ADR session. Let's see. So we are reaching 0.5 standard deviation. Remember the numbers which we have been looking for. 0.5 is always like a target, which first of all, a lot of retracements are happening based on the level. Second is the low hanging fruit. So whenever this is reached, you should peel your eyes. We are not trading the ADR, just as I mentioned. So we are rejecting from this level. We reached it and we are rejecting right now. Volume imbalance over here. Just to show it again and to show you how price is reacting to it. So as you can see, impactful. We are going below. Now we are starting to reject from the mid of the ADR. We are going back. We have a confirmation longer, but we are not trading. So if I would have,
This was almost a retirement setup, right? At the 75%.
Yeah. So, but if I would have traded it, I most likely would have taken a long here and I would have been stopped out with this one. So I would have liked this one. If I would trade this ADR session, that would be definitely a minus for me. Here, the nice tip into it, I would have taken this long, stop below the mid, and I would be stopped out. Yeah. So now we are coming onto. So let's extend our gap here. So we had confirmation long. We have a gap here right now. I literally made sure trading this because I know how this day will happen. So I leave it up to you. I'm out.
Okay.
But it's really, I put you something over here, by the way. Okay. Anything you want to do?
Okay. Let's see. We have a nice gap there. I want to see a reaction to the gap.
Yeah. Okay. I'll just mark this out just for further reference.
Mhm.
Just for further reference, yeah. So, so confirmation to the long side session is over. We are starting the ODR.
Okay, I see 2 rejections on those 2 levels.
Mm-hmm.
3 rejections actually.
Yeah.
I might consider a long here.
You might or you do.
I do.
So you want to take a long? Or not?
I will take a long.
You take a long? Okay. Zuck, zuck, zuck. Stop.
2 ticks below, because if we go
On
lower,
2.
yeah,
Here.
if we go lower, we're gonna go lower. So
Target.
target new high,
New high here or new high here?
the bigger one.
The bigger one. Okay.
Feels like real life.
So now ODR session is over. We're gonna get a confirmation with this candle, so I guess your stop would be going break even, right?
Yeah.
Okay. Anything else you want to change?
Well, maybe I should take a partial because it's a new high. But we just have a very quick confirmation. No, I'm okay.
Yeah.
Don't trick me.
Oh, oh, oh. Almost. Oh, I think that's it.
Yeah.
Yes.
You were trying to trick me, right?
No. I never do that. 7 trades, 3 winners, and 3.5 R for you. So 11.5. Nice trade, nice trade. I have taken the same trade on live, by the way. So volume imbalance over here, volume imbalance over here, strong confirmation, new high, so we're expecting a retracement. I would rather look, I would look for something. I'm not allowed to trade.
Okay. 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 Rejection. Okay, rejection.
Where do you feel rejection here?
I
From which
mean,
level?
to the IDR, so it was broken, but immediately whipped back.
Yeah, but we are still not over the DR, just as a... You know,
Okay,
like for me a rejection would be like rejection looks like that. So this is not nice.
I see. You need to.
Just my understanding, because like look, we are not able to
It's
close above here. So now we are getting there, yes, slowly.
okay. Now I might consider re-entering.
You tell me if you want.
I'll wait another candle.
Okay.
Okay. Now I wait more. An imbalance.
Here is the imbalance.
Now we're in no landman, so let's wait.
You're learning. I like it.
Now I like this. I don't like this one. So let's keep going. Okay. I see an imbalance there. Yeah, price might come back there again. So let's wait another candle.
I really like it.
Now a
So
rejection there.
I mean your logic. You're slowly, like you're telling me things. I see the same way.
And I see another volume imbalance now.
Yes, here, correct.
Okay. Reject. Okay. Yep. I like. Oh, volume balance there. Yeah.
What else?
Which?
What else? Look closer.
Well, the midline.
Correct.
Is there more? There is the.
No, midline was correct. So we have the midline here. We have the volume imbalance here. So
that's another candle though, because I haven't seen a strong rejection. Okay. Too early. I see. Can you extend the volume imbalance below, underneath? Yeah, that one. Oh, I like that one actually. I might enter there.
you might or you enter.
I enter there because it's a beautiful bounce.
Good boy. Good, good, good. Stop.
Below. Let's do 3 ticks below the volume imbalance.
1, 2, 3. Target.
Target. What time is it now?
It's 7:15, so you have 1 hour 15 minutes.
Yeah, let's do the volume imbalance above.
This one?
No?
This
Above?
one?
Yeah, maybe a new high of that one. Yeah.
So here, above here or here?
Above the high. Yeah.
Here, okay. I think that's a good trade. Volume imbalance over here. You saw that? Yes, everybody hopefully saw that. Here, this volume imbalance, and you saw how quickly we came back into it and back into it. Same here. How price was immediately filling it. Beautiful to see. So your trade is done and dusted.
Nice.
3. So he's overtaking me. I can't believe it. That's what's happening.
Wow. You would have made a killing in this one. You just were not allowed
Yeah,
to
but
trade.
no, I know everything. Like this day I know because I made a good profit on this day. So it would have been unfair. I literally would have known what is happening. Nice. So session almost over. Let's see. So
Oh,
you
new
would
high.
have even go for a new high. Look at the levels here. You see, I think everybody is seeing this now, right? Look how we are using the volume imbalance to. It's like a ladder. Price is taking the ladder upstairs. So even higher. Nice. So you could have even go for more Rs here. And that's it. So I lost the backtest against you. So I'm always happy to lose against my students. I'm very happy. But what makes me more happy is you had a rough start. Yeah. And I think that's also important for everyone to see. Like if you just stick to your rules and you stick to your entries and you, like there could be one day, there could be there could be 2 days, there could be like 2 bad sessions in a row. That's happening. You can't avoid that from time to time. But as you can see, what happened to Mage, like till this session and this session and the previous session, he was literally around plus minus zero. And now he managed it with capitalizing on the setups which were formed here during the days, to even reach a higher target than me, who was looking like the clear winner in the beginning. Yes, I would have also made more R here, but like the most important point is really to see how Mage was starting into this backtesting session and how it turned out. I think that should give a lot of confidence to everyone else to understand that you should not judge results based on the picture of the moment. You should stick to what you see, and you should stick to what you want to trade and how your trading plan is functioning. And then you can end up like you are doomed to make profit. I mean, it's becoming my favorite sentence, but even without high-tech support, and I know Academy people would have made a killing here. So we just did it one more time, live backtesting, just DR. We used what I explained to everyone, DR levels and VIPs and GIPs to make decisions for trading. So I think that was a great session. What do you think?
No, for me it was amazing. I felt the change also psychologically, you know. I was a little bit I was not expecting this, by the way, people. You know, I didn't know I was gonna trade against the master, so I had a very rough start. And something changed through the session when as I was watching him placing the stops and then explaining why the stops were there. Like something clicked with me, and I said, "Oh, well, I need to use my brain when thinking through a trade." You know, it's not like I like the setup, then I take a trade. You know, you really need to think it through, see more elements, plan the scenario in your head. That really happened during the session. You know, I kind of find other elements, supporting elements to take a trade. Look at the price action, look at the gaps in the price. If there is a caps below, you know, price is gonna come there eventually. So be patient, don't FOMO. And it was amazing. Like I feel like transformed.
You know, what really showed me that what you're telling me right now is that the completely truth is when you told me, please extend this volume imbalance. That's what was the point for me, where you can say like the teacher is getting 10 centimeters bigger or taller, because like that was the key moment from all the session we did together right now, where I knew for me that you understood something. Because if not, you would have not asked me that. I have seen it. So I really waited for the moment till this click what you're talking about came to you. So, and for everyone else, Mage is a trader, an aspiring trader like you are. He is not a professional super trader. He is just a normal trader like you and me. No, like you, like Mage and you guys. That's what I wanted to say. So, and I didn't tell him that I'm gonna do this with him. I told him, hey, come, we're making a stream together. We're gonna do some DR lands, and we're going to. I explained something which I explained already in the academy, and then we're gonna do some backtesting. But I never told him that I let him do the backtesting, and I didn't tell him that he's backtesting against me. So I'm very happy about the outcome, because it was a real scenario. You could see, like I could hear from his voice that he was like, there was a point where he was getting a little bit shaky. But the moment when I told him about, hey, why I would put my stop over here, why it makes sense to think, like, and I explained him my logic, I really heard it like literally clicking in his head. That was the moment where then I was confident, because I was also thinking, okay, oh wait, like that's not a good outcome for the stream right now if I have 14R and he is losing something. So I was a little bit shaky also, and I was like, okay, mate, let's go. But at the end of the day, it was very nice to see. And like the really moment for me was the one when you said extend the volume imbalance, and that was amazing. So I am sorry that it tricked you into this one. But I think it was a good experience for you too when it comes to the trading side.
Actually
Um,
put the psychological aspect into backtesting, which you usually don't have,
yeah.
which it's great.
It's for everyone. It's different. I mean, like only when you do like the back testing in front of people, it makes a difference, you know. So even that one, and then you have me looking over you, and yeah, I understand that. But the most important point is really to what you did. You did perfectly, in my opinion. So I think you already took some good knowledge from it. And like I said, we are not even using any tools. And I think everybody should also work. This is like the basic knowledge for DR. This is basic understanding without anything tech support. Like, and the next step, the next level of trading comes then in with what we presented before we started the backtesting session. So you need to understand the basics of DR before you can fully capitalize on the other stuff what we are giving. But that's what I'm here for, and that's my job in this case, and we're gonna get there. So 3 hours of stream. I should like. What do you think? We should make a gateway for paid stream, paid TV, paid master TV for all the haters. No, just joking. So 3 hours of stream. I hope everybody enjoyed it. Yes, we started with academy stuff, but I think it's important also for those who are not in the academy to see what would be the next step and to better understand the difference. And then we went for 2 hours together, Mage and me. We had an amazing backtesting session, and I really loved it. And I hope everybody enjoyed it with us. And yeah, any questions?
Yeah, people seem to have enjoyed it. They like the format, and I think they learned something themselves through my experience of learning with you.
So next time I have to trick in Nindo, how we can get Nindo on a live stream. Love you. So, okay. Okay, then thank you guys. Was an amazing stream. I enjoyed it. I one more time didn't feel the time. 3 hours are over, and I could go for another hour, but I have to go back to my ticket hell, and Mage actually has to do the same. And
Yeah.
so we wish you whatever time zone it is. For me, it's 2 o'clock in the night. For Mage, I think it's 11 o'clock in the evening. So whatever time zone you are, enjoy the rest of your day or night or whatever you're gonna do next. And latest next Sunday, we'll see each other again. Till then, bye bye.
Bye bye.